Hey, this is Danielle, and today I'm going to talk about Tesla earnings. So, Tesla has been a short going into the earnings report because, we've had three gaps lower the last 3 quarters going into, well, after the earnings report has come out. That just demonstrates, investors aren't happy with what occurred on that earnings report. That's why we're seeing those gap lower. Last quarter, we did see a fall going into the report and then also a fall afterwards. The quarter before that, we saw a rise going into the earnings report, but then disappointment after. Quarter before that, fall going into the report that continued falling after. So, it hasn't been super consistent. One thing that has been consistent, though, has been that it's fallen after the report. So sometimes what you'll see when a company has fallen multiple quarters in a row is you will see the stock selling off before the report because investors are saying, man, I don't want to be holding this stock if it gaps down, 6.9% or 4% or whatever the case may be. So that leads you to a couple different trades. Number one, I've been talking about the pre-earnings short for a while. This one has continued to come through. My price target on that was $200 a share. So, at this point we're at 208. I would say, if you picked up this, you've probably already had a nice run. I'm not super picky about my price targets if I'm using puts, especially if you're getting close to the earnings date. Oftentimes it's better to just take your profits and say, thank you, Mr. Market, instead of waiting for the exact, $200 a share, because it might not come, right? So I think the short at this point has been good, but that leads me to, what's going to happen over earnings. Well, you have basically three options. You have the likelihood that margins are going to be compressed again, sales are going to be not as good as people want, and it's going to roll over. I do tend to stick on the bullish side of Tesla because I do love Tesla, but of course I'll admit that is a possibility. We have a $12 expected move here, and with you trading right at 208 right about now. And again, by the way, these numbers would need to be redone right before the earnings report. But with it trading at 208, the likelihood that it could pull back into 195, 200 on that earnings report, I think is a pretty decent possibility. That would bring you to this critical area of support. And I know people have been asking me, like, where can we buy Tesla? Where can we buy Tesla? I haven't wanted to buy it as it's been falling pre-earnings, but if it gets, another kick to the gut, and if it holds this zone, I think that would be a great buy spot. But the thing here you have to look at is if, because guess what? If it breaks through this support zone, there's really not any support until you get all the way down into here, say 150, 155, 165, 170. So quite a ways lower. That's why I say, if it doesn't hold a key support value, wouldn't want to buy it because it could flush really quickly. So if you want to trade Tesla to the downside on the earnings report, I do think that that's going to be a great target for you to use. I think it's reasonable to say that it might fall again because of the trend that we've seen. But I also want to take the contrarian view here that, sometimes when you have a ticker that has fallen 3 quarters in a row and everybody's shorting it, what will happen is that the report won't be as bad as people fear, and then you'll see it skyrocket to the upside. So what if that occurs? Then what could we do? Well, after the earnings report, what you'd want to do is you would want to target these areas of resistance. So you have a resistance zone at 220. You're going to have another one at 230, and then you're going to have another one at 240. So basically what you do is you'd look at the expected move, which is $12.81. I think that overlaps perfectly with 220 based on where it's trading right now. And then you'd basically say, okay, well, this is my conservative price target. If it breaks through this zone, your next target is up at 230 because that is the 200 simple major area of resistance. If it actually got that high and broke through here, then that's the point where you're looking at 240, but you really can't look for 240 unless you see just this, massive upward move Kind of what we saw with Taiwan Semiconductor, where, you know, it's just sitting here and then all of a sudden, boom, gap up. So those are the two directional options. The third option, which is one that I take quite a bit, is I just sell the at the money premium. Now I'm making this video on Monday, and this earnings report is going to be on the 24th after market close. So I can't tell you which one I'm going to pick just yet, because it is going to depend on where the stock is trading right before the report. But I do frequently do a situation where I'll sell the at the money calls and puts, and I just bet on a neutral trade. This is because, you know, as I mentioned, like it could go up if there's a surprise, it could break through if there's a, you know, if we continue going lower. So who cares? Let's not even make a directional pick. Let's just sell the premium. So the premium is right now $12.81, as I mentioned a few times. So basically just come in here and say, okay, you know what? We are, and you know, it's not a great example because you're at 208, but let's just pretend it was trading at 210. You had that at the money premium you could sell. I really do like to do it when it's at the money. So if you did 210, 210, this should be a sell. Let's see, 2250, 197.50. So if you did something like this and you said, you know what, I don't care if it goes up or down, I just think that it's going to stay within a range. You have a $12 expected move. Let me just sell this at the money premium for $9 because, you know, there's a good probability that it'll gap up and then it'll pull back down, or it'll gap lower and then it'll come back up. So if you do something like this, you can get a really good risk to reward ratio. So, you know, you're selling premium for $9. You're risking per contract $335 for a max of $915. That makes your risk to reward in your favor. And then you can basically just try to target 50% of the credit overnight. This is actually what I do on Tesla all the time. You know, I'll do that. I might combine it with maybe like a bullish butterfly up at 220 or 225. Might combine it with a bearish butterfly at 200, but it's a little too early to tell. So if you want to know what I'm going to be doing with that, you can follow me on Twitter. So you can follow me at Trader Danielle. I'm going to be on CNBC on Wednesday talking about Tesla. So I'll definitely be posting that here. So check that out. Otherwise, hope you have a great rest of your day, and I'll see you in the next one.
Hey traders, thanks for watching this video. If you want to make sure that you get all of our free trading content, make sure you hit subscribe, and also give us a like and comment down below. If you want to learn more about us, and if you want to join us for live trading in real markets with real money, make sure you go to simplertrading.com, where you can join us for more info. Thank you very much and have a great day.